probably just run for it right off the rip. You know, straight into it. Equal highs. Those will get taken out. $5, $15. Yeah, we've already been moving a lot, to be honest. Clear to low. Bullish. Bullish. Clear to 15. Look at that perfect tap. Volume balance off. Oh, deeper. I thought we'd give it the old tap and go. Probably still will. And there it is. Just a light run. All right, we got to see though, right, I kind of want to talk through. So yesterday after we made the video, right, we were speaking about the possibilities of leaving behind a 1 hour fair value gap here, using that to go long, or at least find support anyways, and then reach into consequent encroachment, and then the buy side. We've already done that all before the opening already. So this is where we have to kind of see if we're extremely aggressive and want to keep running highs, or if we're going to fizzle out here. The fact that we created that fair value gap and left it as a breakaway though, already kind of tells me that price is pretty bullish, right? We made the breakaway first, followed by institutional order flow, right? So this candle barely got back into this fair value gap. And then we blast right through that high. So you see initially we halt at the consequent encroachment, not surprising, and then we get through it. But notice how as we're breaking through this high, how aggressive that is. It looks like we're about to leave a fair value gap right there too, honestly. Unless we can come back down and clear this low we just formed. But we are running. So we may just want to keep on. What are the standard deviations at for today? And we've already hit the first. Maybe this 1.5 then. I want to say this is a new week. Wait, 10, 6, 10, oh wait. I just want to make sure I got that right. 10, 6. Okay, yeah. So yeah, we do have that huge new week opening gap that we could get up into here, because price looks like it wants to just keep on running. We got over this one standard. Let's see if we can't use that. Just warming up here with a little paper. Buy. Tough thing is, right, all of these fair value gaps are in here. So theory would tell us, all right, any of these can really be returned into. So if we want to be safe, stop has to go here. That is 7 handles. That's kind of crazy. In my mind, right, we were low, high, lower, low, broken. So we have, let's see on the higher time frame, breakers here. We'll go on the 2-minute consecutive up close candles. So if the breaker should hold, right, I can at least go under that. Keep working lower. In reality, I would really want this fair value gap to be a breakaway as well. So we would go even consequent encroachment of, right, because say we did reach back up into this, midpoint is above consequent encroachment of the breaker, mean threshold of the breaker, excuse me. And then we'd see if we can get, right, that's ambitious, but because now say we leave a 2-minute right here somewhere, that really means I would want the 2-minute discount to hold and this 2-minute become the breakaway as well. So we're kind of looking for a breakaway gap to be formed. If not, we have sides. But it seems like price is kind of on a mission to move this morning. Add 1 to my static. Add one what? Position? Or another account. Oh, hell yeah. So look, right, I was kind of thinking about this. I like this entry though, so I wanted to keep it. But if we are extremely bullish, the most recent discounts are going to hold. All right, so we're not, obviously, as you see, we're not hitting any of these fair value gaps. If we just want to tap and run, the most recent one is the one that's going to hold that. So we may have missed here. Let me see on a 2 minute. Yeah, price is running. Don't want to chase, right? Obviously, get in the habit of chasing it or get caught up in that. You could easily start chasing here. So we still need to be patient and kind of wait for the right PD raise. If we gave all up candles straight into that, right at that point, you can't really be too upset. That would just be extremely bullish delivery. And although we may have had a chance, right, you're not going to get price action that delivers like that too often. So we can be patient and see if we can't get something to hop on board. That's hype. What account was it, or what size? Brisk. Speaking of which, every time you pass, hey, ding ding ding, 100K baby. Good shit, brother. One contract a day now, so all you gotta do. We can do something bold here though, just because. Let's have the assumption price is extremely, extremely bullish. Okay. This is a swing low. This is a new discount formed. We can try to get at least a 1 to 2, right? This is in the case that we legitimately don't want to retest any fair value gap. So more of an experiment. This is a lot higher risk. Because when you're doing something like this, right, you're not necessarily chasing because we're still using the PD array matrix. But you're opening up the risk that price gives deeper retracements right through and can still continue in our direction, right? Like we could still easily come back into this, especially because it's a 2 minute, right? 2 minutes here as well. So we can come back into that, maybe create a little hesitation and run. One thing that is interesting is that this 2 minute is a volume imbalance. So let's say that, right, we're trying to kind of pull off this little move here. We wick into the fair value gap, but then the 2 minute volume imbalance actually remains open, right? So that would create the tail, which it looks like it doesn't even want to do. See, so now at this point, we're getting kind of crazy if we're chasing. But let's just think of it logically. Any new discount, if this delivery is truly going that way, can be used. So at this point, we're going to leave the entry here, but like we would read now. If price is trying to do what it looks like, right, this volume imbalance should not be breached. Honestly, this one might not do. It might not even come down here. But if we did wick into it, we would see what happens there. We leave that original entry here. Because I still think we can get into that, even though there's volume imbalances. There's a 1 hour fair value gap right here that price is going to want to aim for. So we don't even get into that one. All right, so now we just continue to follow that delivery. Whoa. Go like that. Take that away. So there's the first one, okay, and the second. See if we go to both. All right, I still like that fair value gap. Wick through to both, close on the first. See what we get though. One second, fellas, sorry. All right, we back. Oh, my bad, Blaze. I can just skip your question. But on NQ, what's my chart? There it is. Highs. Yeah, NQ hasn't ran as high yet. I guess that's fair. ES is way above it too. So at this high here, NQ hasn't even ran yet. Volume imbalance. Let's see if we can't get back above them. Yeah, we'll see what NQ wants to do. 5 minute. Held its order block, fair value gap pretty nicely. It's kind of sitting inside the same fair value gap right now as ES. But not running the highs. Yeah, that's interesting there. If NQ, oh, okay, so then ES. Right, so we take out this one. Like we said, a lot higher risk. This was really the original fair value gap that we're looking at. So if we can still hold and give us now another opportunity, I'd be fine now targeting this high. Right, on the flip side, let's look at NQ so we can see what we're talking about. Notice how ES ran this high here at 858. Way above, honestly. Whereas NQ created that failure swing. So I'm kind of looking at NQ now thinking if we're going to get back underneath this fair value gap, right, if this fair value gap was to give way, may offer us resistance into lows, which in ES would just send us back into this range. We may not come all the way back for this low. Because this is really still the breaker here. So we can allow for deeper retracements. Doesn't automatically mean that things are going to reverse. Through this, however, right then these lows would be in danger, especially if it was paired with NQ kind of doing the same thing. I just want to see what price does here in that fair value gap. Bruh. Opposing PDA right now. Interesting here. Potential short. Right. Institutional order flow. Hitting that. Running. Obviously you see NQ leading the way. ES want to follow. So this low, these prices are okay, completely not, I mean, this is crazy, SMT. At this point, I can't even consider SMT because I wouldn't be able to use it, right? So we ran the high, we didn't run the high. This low here in NQ is actually this swing low here. Right, so you see the disparity between the two. So we've already ran the low in correlation. This swing low, there's not even a swing low in this chart, but we ran that. Yeah, so this isn't really much help, honestly. Which means we'll just look at ES. At this point, we're fighting the PD arrays, right? Which one wants to take priority here? Bearish? Do we want to get through the breaker, attack lows? Or is this going to hold us up? We get back above the bearish fair value gap and run. Let's see. So this is a 5-minute fair value gap I have pulled up, broken down. Consequent encroachment of that we'd want to hold. We close under it quickly, but I'm not so sure that's an indication of those lower prices just yet. Right, because we're holding the breaker still. So I'm gonna go like this. We actually hold that volume imbalance as well. Ninja issues? Couldn't tell you. Let's see if I can log in. Interesting. So that looks more bearish. We actually hit this. We use it initially. So now as we get underneath it, right, we're using that again. Never got to the consequent encroachment, however. So this high could be ran once more. It's not even 10 o'clock yet though, so still early on, right? Pre-NFP as well. So as we often say, after Wednesday, so after yesterday, I'd be done completely. Wouldn't even be paying attention much to these days. But we'll tape read some. Oh, a huge gap. Yeah, that's weird. Ninja. Are all your accounts with Ninja? Okay. Rhythmical. Yeah. This should be an interesting point here. Ran a high, hitting consequent encroachment. Hitting an inverse. So we should either reject, or if we keep pushing through, but that'd be kind of good for those higher prices again. Another chance at the highs. One minute's there, 2 minute here. Use the 2 minute as priority. above inversion. Something like this. We'll give this a try. If we can close above. See if we get smacked in the face. Gotta close above. Alright. Alright, see, that's how we protect ourselves right there. Not in a rush. Gotta see and make sure it stayed above. Immediately ran right to where our stop loss would have been. Could just be holding that volume imbalance, honestly. Notice how it's paired with that level we have up already. Whoa. No. Oh, internet correction. Mine's goofy. So we get above. Now we may run for it. And we made a new swing low. Let's try something like this. Under the swing low, through the high. Create. Right, we would be targeting buy side in this scenario. But it runs through that as well. Two-minute needs to get overtaken. Yeah, it's telling you, hey, chill for the day, dog. NFP protocol. NFP is just a longer week for you to chill. Ba-da-da-da, ba-da-da-da. Yeah, at this point, just trying to get above this fair value gap. We'll move it though. Keep wicking highs. I don't like when we wick highs like that. We need to accelerate through one of these highs here. Beautiful. Where would 5 handles be? Here. We could take a partial at 5 handles, I guess. Oh, that's only 4. Stupid. Nah, 5 handles is basically buy side, so. But right, this right here is what I'm saying when I don't like to see that type of price action, where we keep on wicking this high, especially because now we have hit. Yeah, we've hit the high of that fair value gap on the 2 and 1 minute. Right, so at this point, we've hit the 1 minute as well. That's the 2, this is the 1. You need to just see it get above. Acceleration would be nice. Perfect. Still though, right, again, so none of these highs have been taken with authority, with aggressiveness. Wicking back into the range. So even though we're going higher, that's good. It's not, I'm not necessarily convinced just by the way that it's doing it, right? We can easily wick right back through. Need to see some aggressiveness here in price. Because we're just hitting this inversion. First time we're getting into it. So if that wants to hold us, right, we close right at the consequent encroachment. That's why I don't like that. You need to see us get above, and then maybe we can come back and use it, but ultimately get up into that. I'll just, yeah, call it for the week, brother. You got your accounts. Reset, take some time to be proud of it. The markets are not going anywhere. They'll be here tomorrow and the next day. Your paper trade. If you feel that itch, that's what you could do. Pull up a paper trading account and just demo ball. Right, so that that inversion right there is holding us pretty well. As we said, not convincing delivery higher. So even though we're moving higher, we don't necessarily believe it, right? We're still apprehensive of it. Because we still haven't really closed above the 2-minute fair value gap either. We've hit the high a few times. Oh. Like in theory, right, we could really have our stop move to this swing low. Because we've already repriced into the volume imbalance, closed back above. Repriced into this fair value gap. Right, so we've hit all these discounts. So if we were to start breaking these discounts, there's a high likelihood that if we close under this low, we would attack this low as well. Right, so to be safe, you can limit, basically cut that risk in half, move it here. For the sake of this, we're just gonna let it rock. Aye. Right, had this been an actual account, that's how I would manage the stop loss. Always trying to minimize risk in the marketplace. So here we go, right? Again, getting higher. Do we show signs of wanting to continue though? Can we close above a high? Close above a high, stop loss will get moved here. But once again, in the range, yep, look at that, see? So as we're saying, just high resistance liquidity run, right? We're noticing the signatures of that to where even if we get higher prices, a lot of resistance getting there. But look, the 2 minute, see, I don't like how the 2 minute is holding the bodies. The 1 minute, we got one body above here. But still not looking good. Right, this high is holding us. Just wonky delivery. Fractalized YouTube setup here. That's interesting. That needs to be overtaken, or we may be reversing. Imagine a 5-second chart here. Short-term high cleared, followed by a break in structure. There's a fair value gap in here. So we're hoping that that fair value gap gets broken, but I'm going to guess there's a fair value gap like right here. So we would want to see price get above that and attack this high again. Or else we'd probably hold this little setup up close candle. Like we say, not looking too sweet. We have this. Is giving us some hope. I like when we close like this and like make a opposing volume imbalance. Right, so even though this is aggressive, we immediately kind of negate that with the volume imbalance. Which is why we'd like to see now. There we go, expansion. Cool. So at this point, we need to run a high and close above a high though. We've already taken this low, right? We can move the stop. Because at this point, we're just consolidating in here. We're going to go like this, all the way up here. We'll take most off here, though. If price can get there. And Q is not having it, right? To be honest. Looking a little more bearish. Holding its 830 level though. But NQ still fair to swings, right? We never ran that high out. We ran that low though. I'm not even gonna look at that. Aye. aggressive wick. See what we get. A close below. No close below. Let's close one though. Bloop. Reducing risk a little bit more. As we said, we kind of got the same thing. Notice we close on the low, volume imbalance, close on the low, volume imbalance. Only issue is we actually close underneath it this time. So let's see if this becomes an immediate rebalance into this candle's low, or if this volume imbalance can actually overtake, continue to just create this choppy price action. But either way, just looking for a move in either direction here. All right, we're still playing inside the original 5-minute fair value gap here. Nice. So we do end up immediately rebalancing. We hold that inversion again, and we run through the low. So now let's see if we actually want to run for the low. As we said, this level here is the 5-minute fair value gap. We visited, or we visited the consequent encroachment once already. If we want to visit it again and close underneath this time, this low here would kind of be where I'd be looking. Notice how this setup actually held its high. So we almost got back above, but the actual swing point ends up holding. Well, we'll show you that 5-minute. So we're just wicking into it here. Five minutes still could be might deliver to the upside. Vacation block. We got a 2-minute. Yeah, that 2-minute still held the bodies. So at 2-minute holding bodies bearishly. 5-minute now. Closing back inside that looks more bearish. As we said, this low. Here. I almost wonder. So we get that low. Let's see if we can get. Right, if I pull up that breaker on the 2-minute. I like this fair value gap just because, right, if we line up that breaker, consequent encroachment of the fair value gap is mean threshold. So I like how they overlap with one another. We never closed under this low, so we still have a chance of kind of just tagging this low, reversing. I want to see if we can push under though, right? If we kind of aggressively push through the fair value gaps, then this low here might be in question. 2, 5. So yeah, that's the 1 hour fair value gap. Take it with the 5. Did we get through? We actually held that low, okay. We actually hold it. Let's check out the flagship. OT. Interesting, okay. So I'll pull up an OTE real quick. Just the old classic original concept. White lines is the range, black line is kind of that golden zone that ICT likes to look for. And if you look, we actually hit that perfectly. So we've returned into an OTE. We held the fair value gap. Interesting. This kind of looks like one of those order blocks we like to look for. No upwards wick, clearing a low into a discount. See if a fair value gap can't get left. That'd be a little tiny risk. Let's see if we went in right on that. If we leave a fair value gap, we'll try one more. See if we keep getting stopped. So we will. Oh, I should have just bought there. Wow. That was terrible. Going with 2. If we can tap it again, we'll go 2 more. Build the actual position. Tiny stop, right? So we could be a little more heavy on contracts. That was way too slow. It's all right. we go. See, you're good. They fucking up. Please attempt to flatten your account. Dang, that happened so quick right here, though. That was crazy. I mean, it played out like we wanted, which is cool to see, but we're not. Yeah, okay. All right, then. We'll partial here if we can get there. Really, we should have was 5 handles. Let's see. We're at 5 handles here. We should have partialed here. But because we don't have the contract size that we want, no partials until swing point. We'll 1. NQ, yeah, the NQ is garbage can. Look, in these, right, this is why we don't really, I mean, anyways, not going to tell y'all what to do. But this is why I refrain from trading Thursday and Friday on NFP, right? Same thing happened last month. To where even if we get moves, it's just a lot more wonky, right? Nothing's really in sync. Price tends to just wander aimlessly. And the probabilities of me catching trades, right? We could still obviously find a trade in any condition. But I just like entering when it's the highest probability for me. I'm not in a rush to be trying to enter trades all the time anymore. We try to do something a little cheeky. This to here would be 5. To break even would be 3. Two-minute fair value gap right here. $43.02. Two-minute fair value gap. Into the sell limit will be 6. Fuck it, let's go for it. We'll add there. Stop will be under the 2-minute. So at this point, we're actually going to go break even. So this is all risk-free here. This TP. This TP. Chicken wings. Oh, what up, Jake? Yeah, sure. So, right, for the longs here, we are returning back into, so I pulled up the OTE. I'm not sure if you're familiar with that. That's kind of ICT's flagship pattern, right? Optimal trade entry, which is when, after we see a break in structure here, so although this is buy side, bullish market structure shift as well. From low to high, we run that range and we get an OTE. That OTE lined up perfectly with this fair value gap, which is also the breaker block. Okay, so even though we are going lower, as we were saying, that doesn't completely mean that we're just reversing. Right, at times we need to create these retracements, especially if we're going to have more high resistance days, which we're already expecting that's going to be. So there's going to be a few run-on stops. And the fact that when we ran this low and this low, we're holding this fair value gap here while holding the OTE right? It's just kind of pointing out to me that this is more a run on stops and not a true break in structure, right? It's not confirmed yet until we see now this candle. So let me start clearing this up, right? Breaker block, fair value gap. But when we run this right here is that kind of high probability order block that we speak of, where we ran a low into a discount, we leave a fair value gap, and then we just get long on that fair value gap, targeting now opposing liquidity. So understanding that this run lower from here to here was to pick up this sell side. So if that's the case, and it was only running to pick up sell side liquidity, once we do that, the opposing liquidity should be targeted, which is this, right? This becomes inner range buy side, external range buy side. So now we're just targeting the opposing liquidity after picking up this here. Like, were you in a short and got stopped is what you were saying, or what? Or like you are already out and now you're just wondering? Yeah, it is a lot. Sorry, Jake. And that's the thing, right? There's so many moving parts that it can be easy to miss one thing and they'll be offsides. And this is just kind of years of seeing it take place, being able to piece it all together. But you went close once we closed under the 5-minute consequent encroachment. Ah, okay. That's fair. And see, this is where it gets tough because even though there's a 5-minute, we're really relying on the breaker as the true, in my mind, setup, right? The lowest point that I would see price go and then being able to reverse. So even though we close under the 5, because that breaker is underneath that, I still need to wait and see if price can hold there, right? I'm not necessarily going in right away. We still need to get the confirmation that comes here. And Blaze, right, entry criteria. This really here is just our standard fair value gap entry model. We run a short-term low. If you watch that order block video that we created, this is like a high probability order block here. It runs a short-term low inside of a discount, the 1 minute, then gets broken with a fair value gap being left. And that is our entry, right? That fair value gap. Understanding that we already ran the sell side. We're trying to target buy side now. This is the low risk buy. So we get in right on that wick. And you see how perfect that plays out. Right? Perfect little tap. Boop. Right on that level. Notice where the body holds though. Right? This is how we'd love to see just that precision in price. As we often say, bodies hold volume imbalances, fair value gaps get wicked into. That's exactly what happens here. How did you choose that as a breaker? Well, if we just look at it, right? Swing low to a swing high. Well, what the hell is this? Okay, that's not the right. What the hell? There it is. I was like, what is that? Low to a swing high to now a lower low. When this high now gets broken with displacement, right? We leave it with the volume imbalance. Huge fair value gap, so we're displacing higher. This is all one leg from this low to this high. So now this return into these up close candles is just a breaker, right? So we bounce initially, all this nonsense in here. We can still run this low because we're still inside the breaker, right? So when we run this low and now give us a setup to go long, that's what we're looking for, right? And now we're kind of looking for this into that, hesitate up here. Right, so all this is just kind of how I'm internalizing market structure to where when we have internal range liquidity like this resting within a discount, it can still be ran and price continue in our expected direction. So bam, beautiful there, partialed out, break even. We'll see if we can't actually get into, right? Buy side here would be ideal. We'll remove that. 2 minute holds us beautifully. I mean, I really want to see up here if we're being honest, but might be ambitious. Let me see. We've already cleared. No, we could do it. We could do it. Just an extra, another 5. So we'll see if we can't capture another 5. We're gonna go partial here though. I saw the close under the 1 minute fair value gap. All right, let me follow your thoughts here. You saw the close under the 1 minute fair value gap here. And 5 minute consequent encroachment. Let me pull up the 5 minute again. So we close under that here. Okay. So we're under both. Yeah. Took a short on the next candle. Went short here. And then immediately that's unfortunate shit. Yeah. That's nice. Oh, we're going quick. Should we go new week opening gap? No, we're getting greedy. We're getting greedy. What even was this? Oh, it's a fair value gap on the 15. I forgot what I was targeting. 1 hour. It's a 1 hour fair value gap. Yeah, we'll target the high of the 1 hour fair value gap. But no, I could see, right? I understand what you were looking at, Jake. And that's just where it's tough, where, right, you're going to kind of get the signatures that price wants to go lower, but there we still have to understand the deeper, we'll say, setups and just market structure that's going on. So like for me, that's what I'm saying. I wouldn't have felt comfortable going short unless we got underneath this fair value gap. Because all this in here to me is just noise, right? To where we're moving lower, but it's with the intention of running this sell side to just reverse and then continue to run higher. That's all right. Learning experience. In reality, this is really like the text. I wouldn't say textbook. These are the highest probability or like the cleanest type of scenarios that we could have, to where I want to see us deliver into here first, and then I'll kind of point out exactly what I mean. See if we can't get up there. But when we create an original setup, breaker block, right, is the original setup of the morning. So notice at 9:30, we're completing the breaker formation. So when I speak about original setups, that's what I'm referring to, right? That first kind of discount or premium that gets formed in the morning. We create that. We then create and engineer a liquidity point, right? We give a retracement, now creating a new liquidity point, sell side. So we create buy side, we create sell side, with the intention that we're still going to run this buy side. So, right, so as we create this low, price is already predetermined that it wants to run this buy side here. This is its next true objective. This sell side is just created to engineer, right? Not to use you, Jake, as the example, but people just trying to go short, right? It could be people trying to sell the breakout here at this low, right? It could be people just trying to sell a reversal here as we kind of run into highs. So regardless of what they're doing, we're just engineering liquidity. It's taking place though in the original discount that was formed, right? So that's still the breaker. So as we come into it again, right, that discount can still hold us, and especially if we're just running the liquidity like we did here, right? So that was really nice to see. And that's why I was confident that this setup here would hold us, and we're still going to try to target these highs, right? We paired the OTE, we paired the breaker. When we have so many overlapping PD arrays, and price is kind of showing the profile it wants to create, this is like the lowest of risk buys that we could take here. Because as you see, right, it's just such a small little section in price, but we can trust that it's going to hold. price is just fun, right? Just learning things about price is always interesting, at least for me anyways. I nerd out about it. But that's why I've been successful with it. Right, you don't even need to get as deep as I do, to be honest. You could find a clear-cut model, just run that day in, day out, collect your bread. For me, I was a little more of the just deeper type. Wanted to know more, have more understanding of it all. What's really going on. So like now, right, if we wanted to keep playing with it, pause. This fair value gap here, I would kind of expect what happened here. If we run into that, just be a run on these lows, returning into that discount for then to reverse into our target. Best case scenario. Another day to learn. Ain't that the truth? We all learn it every day. The day you stop trying to learn is the day you get stagnant. It is the calendar causes bad conditions. Yup, you got it right, brother. Right, we can almost expect price to deliver in wonky ways before the day even starts, and we've been able to do that multiple times, as you guys have witnessed. And yeah, you got it. You got it right. Large ranges, right? The overall week itself, FOMC and NFP week, right? The best days, like we kind of look for, would be right after that FOMC event, which we're still gonna, right? This trade right here is gonna work out. It's gonna play out nicely for us. Obviously, we've already secured profits, but you see how it's a lot, we'll say back and forth, right? It wasn't one clean, aggressive move straight into our objective. So you have to be proficient in understanding the market profile, or what price is kind of trying to do. And because we're playing here so much, I almost just want to exit at our original position. Nah, we'll go new week opening gap. So we'll target the new week opening gap low. New week opening gaps are strong magnets, so we'll just trust that price, right? If it has the intention to get up there, it'll get up there. Yes, sir. Good entries, brother. Day 7 for 3. You need to trade. Oh, so you're done right then? Nice. Hell yeah, brother. That's hype. Are they static or just full? 50Ks? 100Ks? '50s. Fuck yeah, bro. Congratulations, my dog. Officially passed. Oh, 2 air horns, 1 morning. That is really so loud. Plan to trade 1 or 2 lots. Lots, look at you. Forex guy, I could tell. We're in futures now, brother. No, that's funny. Contracts. Lots does sound cool, though. Lots. Damn, I miss trading in lots, man. Now you got me reminiscing. My Forex days. About to go back to it. So now we got to sit through another little consolidation. And we're thinking in here, right? So for us, it's obvious that there's a giant fair value gap right here. But we have to think sometimes we're a little too, what's the word I'm looking for? We overestimate other retail traders, we'll say. Right, to where a lot of people might be seeing this little whatever this is, channel or something like that. And if we were to break out, right, like say they're trying to do some dumb trend line or some nonsense, right? And they think, oh, if we break this, we're going to go lower, right? So as soon as we break that, they're going to sell short. They're going to try to sell short. Whereas we understand we can run all these lows. That's favorable, honestly, and return into this inefficiency here and still easily deliver into this gap. So there's always just counterparty liquidity, right? Dumb money. We're still kind of dumb money in a sense. We try to be a little smarter than fully dumb. I think we're getting there, right? We have a decent understanding. It might just run up there, though. I'd like to see a retracement, just for the sake of things, but cannot complain about a target being hit. Ba-da-da-da, ba-da-da-da, ba-da-da-da. Oh, kissed it. At this point, here. Get us out, brother. For a smooth 15 handles. Don't play us. New fair value gap. Quick fair value gap tap into target. Or straight into target. But this right here. With the wick. Two times. Third time's a charm. Oh. Steady. Boom. There it is. Just had to play a little bit. Yeah, honestly, like I said this morning, once we saw how decoupled they were, like I'll look at NQ. I always have a chart of NQ up, right? I have a few monitors, but I'm only really paying attention to it if they're moving in sync, right? Or creating like perfectly matched SMT that we would expect. But as we said this morning, there's our target, beautiful. Honestly, if we get through this, we might go up into this 1.5 standard deviation. Not getting to the high of that. So this is a huge new week opening gap, right? This new week opening gap here is 30 handles. Now that would be a super trade. Should we just take it from low to high and hold? No, we're content. But anyways, back to the plot, sorry. Right, when we were seeing NQ in here, right, so look how really just they're not moving in sync at all. They're not even creating SMT either, right? We're running this high so aggressively, whereas NQ couldn't even get it. And then when we ran the low in NQ, right, that's this swing low here. So you see the disparity between where these lows are placed, right? We do end up holding, and look how deep of a retracement here we get in NQ, right? Where we run this low, where this low in ES is goddamn all the way down here. Right, so when I see that, like we mentioned, NQ is really not of any service to me at that point. And our attention goes solely to what this price action is providing. So even if we had SMT and NQ, or NQ was showing signs of going lower, we're still going to just make the play based off ES alone. Yeah, you said that last time, B. You still had me tripping though, because I was like, bro, I don't see it. I don't see it. Let me try again. No, actually, I did see it on the 5 minute. I take that back. Right here is just ugly. But yeah, on the 5 minute, that's good there, honestly. Right, look at that. So we could say, what's this fair value? This fair value gap. This low. Gets ran with that low. Oh, no, it doesn't. Still all right. It's like not the prettiest, but it gives you a better idea of just where price may go. So you can use it more as a barometer. I agree with that. If this looks heavy, you should see expansion, which that looks crazy heavy. So we should try to, oh, too late. I was going to try to make a play off this new week opening gap here. Damn. We tapped that perfectly. One handle stop. That's aggressive. Let's take this play. Under a handle stop. How precise can we get? All right, this one's crazy. This one we're just playing around here, okay? Don't take nothing too serious. We're seeing if this is really as precise as we can be. Right, because we ran through the new week opening gap. We engineer a discount. Bang. We get now delivery into the discount, into the new week opening gap low. We then close back above the fair value gap, which means it should be balanced. Which also means any swing low formed right below it should also be safe. We're here algo trading. It's very algorithmic. This one is sketchy, but it looks fun. Let's give it a go. 10 contracts because it's a one handle stop, 0.5% risk. We'll go in here. Bigger, right? Since we went in with such small, we could still leave this one. Just gotta lower the contracts used. Nice. Still the same risk. Seeing if the volume imbalance holds us instead. If it does, then we can get up into here. Oh, see, so that volume bounce close. So per our rules, close it. Now we go back to the original entry. Price about to run now, watch. That's all right. We follow the rules. All right, let's see if this plays out. This is the fun one here. Just blast right through it. I'd be weak. Hey, at least we would know. crazy thing is we could probably like partial here. We're gonna let it rock, but say that was a 1 to 2 with the one handle stop. That's already a 1 to 2 right there. You could have closed if you wanted to. But we see how precise you can get with this stuff. I mean, come on. Legitimate one handle. But following order flow, right? If price is creating these signatures and we truly are going to deliver, they should hold us. So you should be comfortable letting them play out. If this volume imbalance can stay open, that would be best case scenario. At this point, I'm comfortable jamming it right here. Volume imbalance closing, not ideal, especially because we ran this liquidity. So that's why I'm cutting the risk there. That's pretty. Risk free. I want to get that 1.5 standard deviation actually, but we'll partial out at 5 handles as well. So basically taking 2 back to back in case price wants to be crazy. All right, we'll close half there. Close the other half at the actual level. Ay, ay, ay. Oh. If we would have held that original here, right, that still would have planned out, but I got a kind of set of rules I use for that volume imbalance entry, and since it closed, we just had to close that one contract. Imagine the disrespect. We just completely tag us out. We have perfectly equal highs here, so I mean, if anything, right, we won't be greedy. We'll just target those equal highs. Oh, 3 equal highs? Playing with us again, just like last time. It's always making these little stops. Boom. Go ahead and get there. Buy that before we deliver into this. But this fair value gap should hold now. So we'll go in underneath that candle with the stop. Skadoosh. And look at the reaction. Let us catch a swing high quick. That'd be nice. Da 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 da. I really just want to see if we could form a swing high for myself. Give me the swing high exit. Yeah, give it to me, give it to me. Purely personal reasons here. Equal highs. I could deal with equal highs. Yeah, I could deal with equal highs. Close underneath that deviation point at least. Let's see. No swing. We get the equal high. volume imbalance over it though, we may just continue to go and go. We'll be done here obviously for the day, but okay, let's see. High of the volume or the fair value gap would be my next bet. We could throw this whole fair value gap up. Notice where we hesitated at. Consequent encroachment of that fair value gap. Perfect. 1, 2, 3, 4. Get above it. Use it as support now, maybe. Who knows? But yeah, everybody. That will wrap up the week with us here. Not bad. You saw loss here, broken even. But this, right? This is why I always say as well. You're going to lose. Shouldn't be scared of losing. We had a loss. This completely outpaces the loss, right? 3-4 times what the loss was. And that's why I trade the way I do, or I'm confident in continuing to trade the way I do, because we keep the losses small, and the winners will always outpace the losers. So yeah, another good day. Wrap up the week with that. And like we said, I just want to kind of point out, right, this delivery here is what we like to see. So when we create, I'm going to clear most of it right now. But this type of price action, right, can confuse a lot of traders. But when we create the original setup, so the original setup, like I said, 9:30, I wait for the 9:30 opening. And at 9:30, right, we break this high, which is now confirming this as our breaker. Right, so this is the original setup now, the remainder of the morning that I am interested in. We're looking for those higher prices. This high now becomes our next liquidity target because this is all one leg. Right, so our buy side target became this. Doing more of a recap as well. Buy side objective, breaker block formed. We come into the breaker once. This right here is key, okay? And this is why I want to speak about it. We did not hit the mean threshold of the breaker block. Look how close we get, right? But not hitting it is a key important thing to note. Because price is still going to want to reference that mean threshold. And we have this fair value gap. So we hold this fair value gap, which is nice. But because I'm referring to the original setup, and notice how perfectly we hit that, right? So we're still leaving room for the 1 minute consequent encroachment to be hit. So we have the consequent encroachment, and now we have the actual breaker mean threshold. Right, so this whole retracement is just a suspect retracement. The false retracement to now engineer liquidity again, right? Give us internal range liquidity to target as we just start coming up higher. So once we form this high, right, create a failure swing here, we give that retracement, then we run the original low, right? So now we have counterparty liquidity to pick up. Buy side objectives are still the main objective, but in able to get there, we're going to have to get some stops along the way. Right, that's what this was here doing. We run that sell side. We hold now the mean threshold. Ultimately, we get below it quickly. But right at this point, we were still looking at the 1 minute. 1 minute holds the bodies beautifully. And from there, we kind of understand, right, the rest of it. We get the fair value gap to form. Notice how the fair value gap is being formed. So we'll move the 1 minute. We're confident in the fair value gap because it's formed right on the breaker. Right, that right there is also not random. This 1 minute fair value gap is the high of the breaker block. Right, so when we see PD arrays line up like this through multi-time frames, it adds just another level of understanding, right, higher probability. From there is off to the races. We don't expect this fair value gap to be traded into, right, because at this point, the most recent discounts should hold us. So as we saw, we're entering here because also on a 2 minute chart now, this is the whole 2 minute fair value gap. Right, so we're expecting more of a institutional order flow entry drill. Right, if we go back to the 1 minute, we had this as kind of the whole area, but really we're just looking for the most recent discount to hold us, which we get that quickly. We run higher. We were looking for a retracement. We don't get. We continue to run higher. This right here was like the fun one. Obviously following order flow, this wick higher, we come lower. We then break through the wick. That's a balanced price range. Breaking through a wick with a fair value gap. Price has no need to return into this. So now when we break above a new week opening gap, that's creating a new discount for us. We create the fair value gap in line with it, and then we reprice into the fair value gap's low. Repricing into the low and now closing above the fair value gap means this here is balanced. Which is why we're confident saying, okay, if this is a balanced fair value gap and price really has to revisit it, then it should not break its low, right? We've already gotten into its low. If it's truly balanced and price wants to go higher, there's no need for this low to be taken out. So regardless of how small that is, right, from the fair value gap, like we said, one tick, or not one tick, chill out, under one handle. But you see how precise we can be if we understand, because this 3 ticks holds price, right? And it's not random. It's not a lucky occurrence. It's just order flow, right? I bet you if we were to pull, actually, let's try this. Take the midpoint of the wick that went into the fair value gap. Look at that, right? I was hoping we hit that perfectly, but you see what we're wicking into. Sure, the fair value gap, but this now is the new discount price is referencing the actual wick into the fair value gap with these stabs lower. And then from there, we get the delivery. Obviously, same thing here, right? Same thing that we're looking for here. Most recent premium to hold, discount. This one's even better because we have no other fair value gap. This is the only fair value gap, right, in this whole leg. So it's obvious price is going to return into that real quick before hitting our target. And now you see consolidating right around our target. So we can pull those back up. All right, so all in all, nice morning, pretty informative. And you can kind of see and understand this type of delivery now where we create, right, a discount, engineer the liquidity. And just because we're returning lower, that doesn't mean that market structure is shifting, right? We're not returning lower into sell side like this. We're simply picking up stops for the true move. But yeah, that'll be all for this week. Next week, let me quickly look at what we have on the calendar. Pretty dead week, honestly, next week. No high impact news until Thursday. So we'll have to do a little bit more, probably just scalping. We'll see what we get pure price action wise. But we'll come back on Tuesday. So we'll do Tuesday, Wednesday, Thursday. Tuesday. Yeah. So we'll take it tomorrow off. Obviously, NFP, be careful if y'all are trying to trade that. Either get in prior to way early or just wait until NFP drops, right? Come back in the afternoon or something, late morning. But yeah, we'll be back on Tuesday. We'll get the week started then. And we'll keep it rolling. Appreciate you guys hanging out this week. As always, hit me up with any questions you have over the weekend. I'll do my best to get back. But until we talk again, take care, be safe, everybody. And we'll speak Tuesday. See you guys.